Video number 3 of 3. Path. Uh-oh. They're losing that. So path needs to be at closer to 20, so to avoid 16. It needs to be closer to 20, so to avoid 16. But Nick, look at this huge gap. Okay. Oh, wait, they fell apart already. Oh, get it. They fell down to here. So yeah, they did the unthinkable. That's why I said, uh-oh. So down here, it's these purple arrows are my own concoction. So you can go long into that base from a trading perspective. You can go long from an investment perspective into a business that shows a pretty okay P&L. So this is puzzling. How much overvalued was it? If it was. So let's look at weekly. Is this... All right, so that's shellacking. So if somebody is taking a flyer on it, on this dip, I get it. Half of a position, that would be good. Can it rally back? 14, maybe 15 tops, and then you have to hit a wall that you can't see. But I bet you there's a wall of sellers as it approaches 16. So the gap is not all of this. It's somewhere in the middle. The gap somewhere in the middle is going to be met with all of this transaction. So it was a good long to buy the dip into that. It was courageous. Just trade it as an investment or as a trade. Figure out which one you are. Palantir, it looks like it wants to break out. Is there mumblings of a buyout maybe? If it takes out 28, it probably goes to 40. It probably goes to the all-time high. The business deserves it if you consider the long-term prospects. The P&L is not outstanding, but it's pretty darn good. What they have going for them is the reputation on Wall Street. They hate them, but they also know that they're good, and they have a good pedigree from Silicon Valley. So they think that the CEO is overpaid, but they do respect his abilities. So buy the dip. If you own it, you can stay in it. If you own it as an investment, if you're trading, you should consider selling some covered calls and leaving some runners on. Quanta. That's not the airline, right? Yeah. I don't know what they do. P&L looks pretty solid. Puzzled as to this underperformance. Rallies into 264. Wall Street does not think that Elon's overpaid. His own board did. 264 is 265 is a line that I think would be pretty tough to beat. And if that's the case, and I think it has a chance of losing 242. And if you lose 242, you end up at 220.16, which would make a good entry. Qualcomm, another one. Why, if anything, everything is Snapdragon this and Snapdragon that. Why is this guy here? Anyway, the green line should be a lot of resistance. And so now this is like NVIDIA. At risk of drawing the white path with NVIDIA. This green path is still there. In fact, it's literally what I just drew, right? Pop. Maybe you struggle into the letter R. Maybe you come back down and revisit and you lose 194. It's easier said than done. But this here is not an obvious entry point. Now, there is another point of interest up above, and I'll put it up here. I think there might be another point of interest up here. So maybe they go for it. Shortable up there. Shortable. Exit point, either here or into 218. Investment-wise, P&L is pristine. QQQ, I'm not sure what you want. High after high. We are approaching the, believe it or not, a long-term. Anyway, we're trading a long-term ascending, very sharply ascending channel. So from that perspective, it's nothing crazy. From a reasonable perspective, it's super crazy. But companies are going, we're so close to 500 and it's a round number. Why not go for it? I'll bring back the fact that so Wall Street needs to do something. needs to do something about the SPY and the QQQ. They have been hijacked. There's no better word for it. Let me see if I can prove it to you visually. Okay, this is the Dow. The market is closed, so this probably is the look from Friday. Let's go to the S&P. So this is greenish, but there's so much red in it. But because you have Meta, Google, Apple, just to name 3, and Tesla, super green, so green, and Microsoft. It doesn't matter what the rest are doing. This ticker is not going to correct because you have like 10 to 12 stocks. At any moment, they can explode and prop it up mathematically. That's why you have that discrepancy between the SPY and the RSP. RSP, that's the S&P. If you neutralize the size of the companies, every company is 1/500th. We haven't made a high since April. So here, the difference is in the QQQE. That's an equal weight one. They finally broke out, I think, or tried to. Yeah, this one, boink. So the Nasdaq is a little bit broader move than the small caps, than the S&P. Nevertheless, I don't know what you're asking me here. Investing, not a place I would get engaged. How high it could go? Wherever they want to go, they can go. Would I go long here? No. Would I be short? Yes, I am short and I'm losing. I haven't looked at it. I don't think it expires in the next couple of weeks, so I'll revisit it this week. I don't know this one. So this is a ticker that's going downhill and the P&L isn't. So you got to ask yourself, what am I missing? All right. So this thing is falling into a prior bounce level. So it's exciting from that perspective. Those who went long anywhere below 116 before made a lot of money. So if you're looking to go long, I get it. Just make sure you're trading properly. I would be worried if they lose 113, let alone 111. But it's a long with a stop. Sentinel 2150 is going to be difficult. That whole cluster, very. I don't think it's going to be easy to cut through all of this. So buy the dip into 19 or 18. SE, I wouldn't touch it anymore. So we did trade it. It was a little difficult, and we were long. If you lose 66, you probably go to 55. If you take out 77, you probably go to 85. So you're right in the middle of a catalyst above and a catalyst below. Lose 66, you lose about $4 to $6. Take out the prior resistance zone of 77, you probably end up in the mid 80s. Comments about trading. Fundamentally, on paper, it's pretty good company. Sweet Green. Never heard of it. Drinks, sides, local bowls. Is this like a salad place? Yeah, not for me. Fundamentally, avoid these stocks. I avoid these stocks. Technically, this chart is a mess. It shows support, I guess, into 23, give or take $1. This looks like they overshot a target on the upside. $10. Oh, yeah, by a long shot. If they are indeed breaking out from 26, the target is 42-ish, 43-ish. So buy the dip into 24 if that's what you're doing. Meanwhile, if you look left, this is not a place I want to be long this stock. That's a place of failure. Don't take my word for it. Look left all the way to 2022. Shopify. It's a good long. Its target 1 of 2 is somewhere around 70. Target 2 is 78. If I'm long, I'm out. This is a resistance area. The market has never been higher. If I took it as a trade, I would definitely lock my profits. As an investment, there's nothing to do. You bought it low, you're at a good position. If I have enough shares, I would sell covered calls. Earnings in 24 days, so we'll see. The P&L is no longer as great as before. It's kind of a mess. So that's why I would exit from the fundamental perspective. So you could argue they're selling rallies. Rally sold, new low. Rally sold, new low. Rally. So there is a path to 52 this year if the market's correct. It's not like a sure thing. Schlumberger, you can stay long to 50 or 55 based on that green M. Now, practically, 49 should be incredibly difficult to overcome, and 51 for me would be an exit zone. Anything above 50, I would exit from a trading perspective. Okay, so it's inside of a resistance zone, and I'm consistent. That's what I exactly just said. Resistance and more above. Decent support short term. Silver, this would be a place I would exit if I'm trading. If I'm an investor in silver for the long term, then you don't need to look at the chart. Just buy silver when it falls and just accumulate. I have gold. I don't have silver. And I think silver cannot move without gold. And gold can drag silver and vice versa is not correct. So until you take out 29.80, this here is an exit spot. So you might see 27 before you see 30, 27 before 30. There's also a ghost print to 26 that they never came back to. Maybe they will never come back to, or maybe they'll take their time. But on Thinkorswim, it shows a ghost print down to 26 one time. SMCI, you got to ask yourself, what, that's the company that couldn't stop rallying with NVIDIA. That's the company that actually improved its sales like NVIDIA. And it's way off the highs. So that's a worrisome thing. The comments are still the same. It is at a place where it has been a pivot. I argue that if it goes to 775, it probably goes to 575, 580. It goes below 600. If it loses this spot, that's 775. It goes below 600. That is still in play. So I'm saying, same as NVIDIA, that white path is still in play. You have a lot of resistance that they've shown they cannot get. I have issues with both of them. Somebody's saying they're preferred AVGO. I don't think so. But AVGO is a slightly better situation. But this one is a gauge as to exuberance in AI, I guess. Spotify stuck in a very tight range now, so you could say the range, something's going to explode. The range was this big and it's coming to a point. This or this? Question mark. A lot of buyers. If you lose 302, you probably go to 285. If you take out 325, here we'll put a. This box is important. And earnings in 16 days. SYK, descending channel for the last few weeks, falling into support. Not that it's easy to do, but if you lose 320, I think you go to the low 300s. This will still be in play, whatever that is. Whoa, okay. And then you have sellers above. I think it's going to be difficult to take out 345. Until then, you're at risk of drifting lower towards 300. Target. Retail is okay. If Target loses 138, Target can go to 120. Meanwhile, rallies into 155 are be met with hard sellers. These are old comments. The zone below is well contested, so it has support below. Travelers, I don't like that. Resistance played out. They're falling out of an area that they should be holding. So if they do get to 195, I think they get to 180. If they do get to 195, I think they get to 180. Because if they get to 195, that means they've lost that blue box. And it has consequences. Tesla. I'm not sure what you're asking me. If you're asking permission to short, permission denied. If you're asking permission to go long, permission denied. So here's what's going on with Tesla. I've been saying Tesla needs a headline, and the headline the kind of headline like Nvidia that says, "Hey, we have new sources of income." So I've been saying for the last few weeks, if not months, saying, do you remember when Tesla was not a car company? Back like 10 years ago, Tesla was rallying, was unstoppable because it was a multi-headed dragon. Fans of the stock, if you argued with them, oh, the car company sucks, and say, don't worry about it, it's not a car company. It's going to sell roof tiles. It's going to sell this. It's going to sell that. Well, we're now back to that. Elon has dropped a lot of hints about having two sources of income. One, robo-taxis, which he's been promising for years and late. And two, and also robo-taxis have legal hurdles. In other words, he could put a taxi on the road as long as the city lets him to. And right now, as far as I'm concerned, I think there are 2 or 3 cities in the U.S. they're allowed to. So it's limited income, but it is income nonetheless. So robo-taxis and robots. He wants to sell a robot named Optimus. So if they start, think back to when they released the Model 3. They said, we have this cheap car. It's going to be 40,000. If you put down 1,000, you got yourself in line. If he says we're going to sell a robot for 24,000, $1,000 will get you in line. I think they would sell 500,000 in a minute. Anyway, everybody would want to own the first gen robot. So those are 2 new sources of income that are not in the P&L now. However, the stock probably doubled in the last, that's a huge move. So to go long now, why now? Look left, this has not been the place. Shorting is hazardous, but you can do it. Just make sure don't short the company, short using sold call spreads or bought puts or put spreads. TSM, bearish setup. It could come back to 178. That's a comment about trading, not investment. TSMC is an excellent company. Look at this P&L. So the chart has downside pressure. So if I were to guess, this is available. And if the markets hiccup, which is a big if, this is available. Now this one, less likely in this environment. Of course, you can eliminate this conversation if they go above 190. This red W will be no longer valid. Fundamentally, I would own the stock. Buying the stock up here, not for me. Okay, Under Armour, I think I have better comments on UA. Nope, I don't either. So I'm wondering, so if this company is still legit, why is it trading like it's going out of business? Everybody still respects their shoes and all of that. Something's going on. I don't know what happened here, but I don't like this technical performance. I feel like it's going to go to 10 or 5. I don't know which one first. A lot of sellers into 6.8 or higher. That red line is the highest point of volume. A lot of sellers above 7.1. And it better hold support, otherwise you're going to test $6. Uber sellers, and that's worked out. I said there'll be sellers in that box, and they have stepped up. It is above a prior resistance, so you do have support. And it did hit a target, barely. So you have a lot of buyers willing to get into the stock below 67. And you have a lot of sellers up here. You see what I'm saying? It's pinched. So it needs a catalyst to get out of that pinch. Earnings in 23 days. Technically, if it breaks above 74, it probably gets to 80. And if it dips into 63, it has a lot of buyers. If you lose 63, and that's a big if, I think it needs the market to bring it there, or some sort of a miss on the headlines from earnings. Then, I don't know, 50? I honestly don't know. It's so far ahead that it doesn't pay to look at it right now. UEC. What happened here? So 1 minute it's making 23 million, and the next minute it's making 180. What is this? Yeah. Okay. Do your homework, folks. Do your homework. So we go from 20 million a quarter to 40 million a quarter to 100,000 a quarter and 100,000 and 0. What is happening? Yeah, not for me. I wouldn't touch this. Technically, it's not going to break through 6.6. And if it gets there, it's shortable. And if you lose 540, you go to, I don't know, 0. Do your homework on the company. This is suspect P&L. All right, Visa. So I read somewhere that American Express lost a contract with eBay. And I was like, what? And then I looked at it, and I think eBay is too small to matter. Technically, this is now going into a resistance zone. I did short Visa unofficially. I mentioned it on the 14th of June in one of my recaps, middle of the day. I never issued it as a legitimate entry point. I could do it now. Like, I could start shorting Visa now, saying this stock going into a prior pivot zone. Between here and 274, there's going to be a lot of sellers. So maybe it drifts back lower. But it's a great business. Look at the P&L. So I would be just talking charts-wise. It fell into support and it bounced. Support bounced. But that same logic says, okay, so now we have resistance here as well. WD-40. I just used it yesterday. I put the stuff on everything, even my salad. No, I don't. Don't put that on your salad. It'll kill you. Maybe. Earnings in 3 days. I don't usually get involved into earnings, but this is a good, legitimate business. Everybody needs that stuff in their house. Rallies into 230 or higher is going to be met with sellers. And 190 approach of 200 or lower is a bargain, given if I look back on the chart. So one can argue they are already in a bearish pattern and they haven't met the target. So I would not be surprised to see it at 180 or lower. And if I do, I would get long. Up here, going into an earnings report, I caution you. If I'm an investor, then I don't need to worry about it. All I need to worry about is having dry powder to add to my position. Let me explain. If I wanted to own 200 shares and I already own 200 shares, I don't add. Even if it falls, because then I'll be taking my position into another level risk-wise. So good business, falling into support, but I'm afraid of the earnings reaction in 3 days. Wells Fargo, shortable just like JP Morgan because of the banks are overpriced. And this one has always skeletons in the closet. Technically, you do have a prior fail. If you take out 63, you probably go to 70 or 69. I mean, maybe that's what they want to go. But I would not start longs up here for Wells. Also earnings next week starting. So all the banks will move in synchrony. And the first, JP and Wells may be the first ones. This one, the XLE, so that was bizarre because we've had a couple of days recently where energy was up and the XLE was down, which is Chevron Exxon. So we have something going on there. I think 92 is a huge problem. If you look at it on my chart, I'll put a line. This and that and this. So I think this whole zone here is difficult. So I'll put an R up here if I haven't. Yeah. There we go, that resistance. So now, having said that, there is support, and I said likely target, and guess what? Doink, likely target met. If they lose 87.50, they're going to 83.50 in a series of lower lows and lower highs. So they are selling rallies. Right now, this could be it. This could be the support, 89. Let's see if they can do it this week. The XLF, again, banks going into earnings. I would be inclined to short it than to go long it. Powell is doing his best to help banks just because he almost broke them. in his rate hike cycle. He almost broke them. So right now, this chart is in the middle of a zone. You have sellers above and buyers below. You're stuck in the zone. 42 versus 41. Exxon, everything I said about the XLE applies here. So Exxon, there is a chance it's at 111, and there's a slim chance it's at 108. If you take out 117, you'll probably get to 120. But I would say it's easier to come down to 110 or lower one more time. Z, so Zillow or ZG, same thing. I know I have lines. Okay, so what's going to take Zillow to 50? If it gets to 49, 48, it probably gets to 53. But fundamentally, isn't real estate in trouble? Well, I guess maybe if they're in trouble, they spend more with Zillow, real estate professionals, in order to spruce up business. I'm not sure. There's some pretty wacky data in there. Anyway, you have sellers going into 52, buyers going into 38, ping pong inside those zones. If you lose 38, good grief, I don't know what's going on. I don't think you can take out 55. So you're stuck in a rut for now. Maybe sell puts to create income. Oh, and with that, we end. I'm surprised, there's some tickers missing from that list, but nevertheless, very few people are asking about AMD of late. That's pretty weird, I think. Anyway, it's an exit on AMD. Thank you for being here in person. I appreciate you. Pointless to do Apple? Yes. Apple's Apple. If the market is rising, Apple's going to be rising unless they give us reason not to trust them. I think the AI thing headline will not play out until the next release of the phone, because they tied the headline to the release of the phone, which I believe is in September. So I wouldn't short Apple now. It has a few weeks of runway without a hiccup on that headline. They sold us on the idea that's like, oh, this is a game-changing headline, but in reality, it's just a phone upgrade cycle, like they used to say, super cycle, whatever they called it. I doubt it. I mean, they might struggle in their sales between now and then if they hype it up so much. It was like, I know my son has gone to. I've been to the to the store of T-Mobile because he wanted to buy a phone, and I needed to do something. I was like, let's go together. And he was there. He said, all right, give me the new phone. He said, wait for the next phone. That was last year. It's going to come out in 3 weeks, and it's going to be the same price as this one. So if you want this one, you get it cheaper in 3 weeks, or you can get the brand new phone for the same price you're getting this one here today. So he delayed my son 3 weeks. So how many people will they do that again? Of course they will. If the new phone will have AI built into it, and their AI prospect is different levels. Like if you go to quote AI, you have 3 different levels, and one of them is on the phone. And if you don't have that phone, you will miss out on that last tier of AI. And it's retrograde, I think, to the iPhone 15 Pro Max or whatever. The biggest one they have now will have that feature, but no other models. So maybe it forces a cycle of upgrade, and maybe not. I don't know. All I know is they need a new CEO. It's still an iPhone company. Okay? All right, folks. I appreciate you. I have another presentation in a little bit, so we got to go. Have a good Sunday. We'll reconvene in the morning. Don't forget to watch the video on Sunday night tonight. Later.